Evening, everyone. It's about 6:50, and this is my second try at video number 237. There was evidently something wrong with the link. So, in case you missed it, the market, which was down 695, uh, finished down 516, 2.17%. The NASDAQ, which was down 250, closed down 139 or 1.6%, and the S&P, which was down 73, finished down 50, 1.75%. The biggest loser on the day again was the Russell, down 42.28 or 3.3%, while the Dow Jones Transports was down only 2.2%, but is down over 6% on the week. Volume was heavier today. Advanced declines were 8-1 negative on the NYSE and 4-1 negative on the NASDAQ. Volume on the New York Stock Exchange was about the same as the volume, about 7 and change to 1. Gold was up 960 at 1716.40. It got as high as 1726, but failed to break out through that downtrend. The oil, which I have on the screen, finished down 65 cents. The chart looks a little different tonight than it did this morning because the service rolled it forward from June to July contract, and prices are a little higher. What I do want to also show is that this 5-day moving average, which was rolling over a little more in the June contract, is a little bit flatter here, but clearly going in the wrong direction. So a break below this area here at 25 would probably send us on a test to $21 or $22 on the downside. Most of the problem today was started early with the PPI, which was down 1.3%. That's the biggest drop in history, although history for this particular indicator only started in December of 2009. The other part was Chairman Powell talking about not wanting negative rates, which, as far as I'm concerned, is great. Negative rates have given us no growth. They absolutely have not worked in Europe or Japan. And Powell also said that we would have a slower recovery. This especially is hurting the banks. Banks with no spread and no demand for their business tend to not make any money. And as an example, the banks in Japan and Europe are currently down about 90% from their high and are only 2% from their lows. So that's really not a situation that we want to be involved in. We also, during the day, had warnings from Stan Druckenmiller, who said that the risk reward in today's market is the worst he's seen in his entire career. He's an older guy, so his entire career is not that of a millennial. And David Tepper, who is a great analyst, runs Appaloosa Partners, said that the market is as overvalued now as it was in 1999. So here are two pretty big guys, both with the same attitude that they're not crazy about the market. You know, their comments are a point in time and not necessarily the bottom line answer, but they are important. Tomorrow we have initial weekly and continuing unemployment claims early in the morning. We also have the export-import prices for April. This afternoon, and you will see it overnight and into the day tomorrow, there is an annual ASCO cancer meeting. And what happens, it's going to be virtual this year. It's in about 2 weeks. But what happens is they get submissions of all kinds of advanced results. And the company today that came out right before I started this, the symbol is ALLO, was trading at 37 up 6, which is 20% on the basis of their released information on one of their cancer fighting drugs. Also, after the close, we had Cisco report. They beat top and bottom line. The stock, which had closed at 41.95, down $1.27 or 2.9%, rallied hard up as high as 44.45. But last I checked, it was 42.93, up 98 cents, which is better than the close, but still down on the day. Have a good evening.